Welcome back, YouTube, to another episode in Oracle's TA, where we take a look at the technical analysis of cryptocurrencies. Last week, we looked at Bitcoin and the historical price action that would eventually lead to us deducing what could happen in the future. And today, we're going to be looking at a more short-term time frame, continuing off where we left off last week. So today, we got Bitcoin here, and obviously, a lot has happened since our last episode, and I'll just mark that on the chart. We had our last episode on June 28th. So last week, we saw a lot of volatility in terms of Bitcoin's price action right after our video. And you know, it's good that we had levels marked out, because if you were trading this range, you would know that we had support and resistance levels marked out. I haven't changed anything on this chart. I have removed some of the boxes that shows the ranges, but that other than that, the levels are still the same. So what did we see? We saw Bitcoin break through this area of interest, and remember, we had a lot of confluence in this region, and I'll get that up here. So we had our point of control, we had a Fibonacci level, which we can see here, the 618 and 66 level, which is typically called the golden pocket. And we had our weekly level. So we had a lot of confluence in this area. Let me just turn that off to make it a little more cleaner. So then we see that price action broke through, consolidated a bit to form what looks like a short-term bear flag, then came below that area, consolidated a little more, tried to break up, however found resistance at that area, and then ultimately lost all support and broke down to the next support level at 18,948. So this level has now been used as support, and it has Bitcoin has since then, just clean that up, pumped up about 12%. And that 12% has shown us a couple things. So if we zoom in here, we see that because the candles were not able to close, and I'm looking at this on a 15-minute time frame, the candles weren't able to close above this area. It essentially formed resistance and came back and back tested that resistance. As you can see, we went up, came back down, back tested, and ultimately failed again down to our support level. So this is good. I mean, if you had the areas marked out and you are a short-term trader, you would have known that this would have been your long entry, and here would have been either a take profit or short entry. Personally, I wouldn't have been looking for a short position here until I saw this second this back test of the weekly level, and then I would have potentially opened up a short. So I did not trade this range. However, I did look at the technical analysis, and I saw a couple interesting things here. So one of the other things was the let me just turn this on here. The point of control, as we can see, lines up perfectly with this area of interest as well. So and this is no surprise to us, as we did label this last week. But the reason I'm bringing that up is that the volume profile is showing us some key levels other than the point of control. As we can see here, we also have a high volume node here, and I'll just put that on the board too. And that has been a key level in determining support with regards to that daily level. So the $19,000 level is a very key level. Now, if we zoom into the current price action of today, we see that we've had a dump, right? We've tested the high end. We've hit the golden pocket, which is the 0.66 and 0.68 level, and came back tested it, and have fallen down quite a significant amount. If we were to measure that, that is a 6% drop from the second bounce, and yeah, pretty much a 6% drop. So what does that mean? Well, I would not be opening any trades here. Obviously, this is in the middle of a range. There's no levels. We don't know where it could go, right? Essentially, we'd want to see some sort of interaction with this level here. Now, couple things can happen. We've already established that this is great support, as we can see here, multiple times, just hitting it to the dollar. And what do we know about support and resistance levels? The more that we, it's essentially the more price action does interact with that level, the weaker it gets. And we've seen a couple hits like I've mentioned. So who's to say that this is going to hold this time around? So what I'm looking for is, if we do get a support bounce, I'd like to see market structure change. So then I would want to see a higher low, and I would be opening up my long trade at this point here. Now, if we don't see that, I then would want to see the area lost. And let's just zoom out to see what else we got here. And potentially a back test, a bearish back test of this daily level, and then further downside. Now, there's a lot going on behind the scenes as well. If I can get my volume up on the chart here, we can see that, let's also take this out, make it a little cleaner. On a much more higher time frame, we see that the volume is dropping off, right? And although there are spikes, generally the average volume for this price range currently is starting to dwindle down. And when we see volume decrease, we expect a move to come for Bitcoin. So right now, I would say it's a waiting game. Like I said, we're kind of in the middle here. We did establish a new range here, which I will also highlight, which is the bigger range is this level here, and then another range within here. So that being said, we're currently in the middle of both ranges. Not really excited to make any moves here, but considering that the volume is decreasing and price action is relatively sideways, I would expect a move out of Bitcoin in the near future. And there's a lot of people online also drawing triangles to kind of signify some sort of price pattern that could determine whether or not Bitcoin will be moving up or down. I think it's still somewhat early. However, this is something to note as well. We are at the bottom of this triangle, and an aggressive entry would be to open up along here, but really the safest bet would be to wait for the breakout. And the breakout would be something like, you come up here, you get a breakout, you come back test it, and you confirm. That's where you open your entry, and that's where you ride the long. But again, so there's a lot of schools of thought in this current market. Obviously, we're still in a very, very bearish state, like we've seen before. Let me just get this here. We've seen similar price action to this, although it's still early to tell because we don't see any indication of a blast up from here or us falling through support. But I mean, we've seen this price action falling down, finding support, becoming range bound, forming what looks like a bear flag, and then pushing it down or falling down even further. And I mean, who's to say that this isn't anything like that, right? So there is still potential for more downside. I have our levels marked out. If we do break through these, we have even more levels down below. Obviously, you have to look at technical analysis from a unbiased and emotionless perspective, just using rationale and data. However, obviously on the moon boy side of me thinks that we could blast up from here. The technical analysis side for me tells me that there is further downside, and that we have to be prepared. So that's this week's update. Hope you guys liked it. Remember, if you like the content, subscribe, hit the bell notification button and the like button. And we do this every Tuesday. So be sure to tune in next week. And until next time, we'll see you soon.